I just speak from the heart. I mean, I'll go and I'll bounce off of you, and we can go anywhere. I mean, honestly, I'm an open book.
Beautiful. Let's get into it then. I'd like to get your origin story. Um, is what I like to capture because there are things that I'm actually curious about that I want to ask you. Everything look all right?
Doesn't, but there's enough to face.
And that's exactly how I feel. Everybody should see more of my face versus the back of my head or something.
I always say the back of my head isn't my business.
I got you, right?
World, you know what I mean? I'm like, I don't care what the back of my head looks like. I just care what it looks like up here.
Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today I have my friend Hannah Kesler on the podcast. We've got an interesting connection from way back, but here I am today and I've got fresh questions, so I hope that you enjoy. Good morning again, Hannah. We've been talking some, but how are you today?
Oh, I'm so good. I'm so excited to be here and even more excited to talk about my favorite topic, money.
I understand. All right, so let me right out of the gate ask you a question that I thought about on the drive here this morning to have this conversation, which is, do you remember, and it's okay if you don't, but do you remember the first time meeting me?
It was at the Greenville office. Was that the first time?
Nope. See there, and
No?
that's nope. No. We met years before. So see, here's why this is so cool. So I want you to obviously give your story, but I think it's neat that you have your perspective, and I'm going to ask you about it, and then I've got my perspective. So I can remember when I invited your dad, Brent Kesler, to my place in North Carolina because I was packing out a room of friends, business partners, my family, to get them in front of the infinite banking information. And here you show up, and I'm meeting you for the first time. And see, I'm not even on your radar. You're just, but you're helping set up the computer, and you're passing out papers or whatever. So you were helping. You were helping as a young lady. All right, so that's just neat. I thought about that. Is she even going to remember? And that's so cool.
Where was that? Do you recall what year?
That would have been probably 2016 or 2017 because I got my first policy in 20. Yeah, see there. Okay, all right. So let's do this. I actually jumped a bit ahead and talked about where I remember at least that we first met. But let's go back to whatever starting point you want, right? Because you have such a unique story. And again, I don't know all of it, and you didn't know everything that I'm remembering, which is just neat. But you just go back to whatever point that you would pick as being exposed to infinite banking. And of course, you can give any background that you want. People are going to want to know more.
Yeah. I'll say I even remember we're at the 163rd house in Kansas City, Olathe, Kansas, to be exact. And in Kansas, because now I live in Florida, okay? In Kansas, you had basements. Here in Florida, we don't have basements. And Dad's office is downstairs in the basement. And when Dad first got started really teaching other people about the infinite banking concept, because prior to that, he was a chiropractor, he was doing his chiropractic coaching. And then with the chiropractic coaching comes, okay, it involves money. You got to buy the adjustment tables, you got to put the product, if you're selling isogenics or whatever, into the office. How do you finance for these things? And so I remember that Pops would sit down in the basement and he would do the one-on-one presentations with those people. And so my brother and I, my younger brother, Zach's now 23 years old though, and we would always mimic Dad because we could hear even from like the second story of the house, because if you know Brent Kesler, his voice is booming, like it carries. And so we would always make jokes with him when he would come upstairs for like dinner. We would always recite back to him, money for food, food for money, money for car, car for money, money for house, house for money. And we just kind of, just kind of pick at him, kind of make fun of him a little bit, kind of get a little giggle. But honestly, I've been introduced to this concept at a very young age. I didn't totally grasp everything until I started to become a teenager into my young adult life. But I do remember that Pops was really sitting there having those one-on-one conversations, and I knew what he was doing. I knew that we had these policies. Did I understand all the inner workings of it all? No, when I was like 14, 15 years old. But dad would actually sit us down when he was buying like a new boat for the a condo over there at Lake of the Ozarks in Missouri. It's right in between Kansas City and St. Louis. So we still go out there. We spend our summer months out there. But he would sit us down and say, hey, this is how I'm going to buy this new Cobalt boat. I'm going to take a loan from our family bank. I'm going to go buy the boat. And then now I'm going to pay myself back and charge myself interest. Guys, do you understand why I'm charging myself this interest? And he would really get us around the campfire to understand more and more. And I remember specifically, though, I was kind of just identifying what I wanted to do with my life. I graduated high school early. I actually graduated when I was 17, and I moved out when I was 17, and I was doing a little bit of community college. I was almost going to like pursue being a CPA. Like, I love numbers, I love math, I love teaching, I do love money, but I was like, this isn't really what I want to do. And back at the time, I was a waitress at Cracker Barrel still. And I remember on my 18th birthday, I had a shift. It was the morning shift. I was working from 7 to 2, and dad picks me up after my shift is over and he says, Hannah, happy birthday. Now that you're 18 years old, we're going to go to Commerce Bank and we're going to close your savings account and you're going to start your first policy. And at that time, I was saving up about $100 a week, because that is something dad really taught us at a young age, is pay yourself first, be disciplined, have a savings. You don't have to save just to save for something. You should just be saving in general. So I was saving about $100 a week. That was coming to $400 a month. And dad says, you're going to start your first policy $400 a month. And back at that time, I didn't know everything that I know now. And I was like, okay, dad, sure, I'll start this stupid life insurance policy, whatever. Right. And now, though, really being into it and having that first policy, I got this concept like 95% of the way, but it was that last 5 to 10% that I was missing, was me actually using the system, using my policies. And when I was trying to figure out what I wanted to do, so left community college, I actually dropped out of college. I was investigating some schools right around your neck of the woods, actually in Georgia, called Savannah College of Art and Design in Savannah, Georgia. And I really would love to go that route of being a fashion designer or having my own boutique at some point in my life. But that's when it finally hit me that I was like, oh my goodness, I'm going to go to school. I'm going to rack up all of this student loan debt. And then when I leave, I'll go find myself like a 45, 50 a year job. I mean, I'm kind of working backwards in that manner. So that's when I was having the conversation with dad, and dad says, well, hey, I need some help within my business. And if you're not going to help me, I'll go find someone else. And I was like, all right, dad, well, what do you want me to do? And that's when I started doing the applications, working directly with these underwriters and helping these clients get approved for their policies. And that's when I used my policy for the first time. I want to say I was about I was like 19 years old, I want to say, maybe a little bit before that, maybe 18 and a half. But I needed a new computer for this work. And MacBooks, I mean, they're a hefty little price tag. That MacBook cost me about $2,500. So I took a loan for my policy, went down to the Apple store, I bought the computer, and then I was paying myself back, charging myself interest, because dad taught us those good principles and habits. And then that's when I really started within this business, is utilizing my computer, helping folks with the applications. And from there, it just really progressed. I was doing that for a few years. And then I was traveling around with dad, being his personal assistant, being the tech girl, handing out the papers, right? And then from there, I started speaking on webinars from Webinars then led to live events right after COVID time. I want to say it was March of 2021. There's this gentleman, his name is Justin Colby. He's a big real estate investor, big into the mobile homes park. And dad could not make this event in Phoenix, Arizona. So he says, "Hey, Hannah, I can't make this. So I bought you a plane ticket. You're going to fly to Phoenix, Arizona all by yourself, and you are going to do your first live presentation." And honestly, I was so scared. I woke up that day in the Airbnb and I practiced that presentation like 2 to 3 times before I even went in and gave it live. But that was really the big pivotal moments that I learned that I love speaking on stages. I love connecting with people in person. And I just love sharing this message because, Jesse, you can relate to this. All we do all day long is just share what we actively do within our own lives. And so that's just what I'm talking about. I just tell people what I'm doing, what's working out for me. And hopefully, this is something that you want to do and you want to come on this journey with us. So, high overview of how I got to here, started my own bank at 18 years old and became a millionaire by the time I was 24, just doing all this stuff.
All right, so let me dig in on some of these things that make me have further questions. So let's go to when you had checking account, saving account, like you said. All right, so was that you that started those accounts? You know, did you have that initiative, or did Dad even beforehand say, "Hey, how about you go open up a checking account? How about you go open up a savings account?" Like, where did that impetus come from? You know what I'm saying? To do the traditional thing, at least.
Yeah, it was dad. So my first one was my savings account, and that was mom and dad because I would get checks from grandma and grandpa for like my birthdays and different occasions, right? And so I would take those checks and I would go and put it into that savings account. And then when I started working, my first ever job was actually at one of dad's chiropractic offices in Olathe, Kansas. I was 14 years old back at the time. That's when I personally went down to Commerce and then opened up my checking account with them. Because, all right, I'm going to be working, I'm going to get being paid bi-weekly. So I need for this money to get directly deposited somewhere. So I opened up that checking account. Mom and pops earlier than that helped me with the savings account. And then from there, the story for another time, but then I got fired from the chiropractic office.
Okay. Well
Best
then,
thing
okay,
ever
I'm gonna hold
happened.
you. I'm gonna hold you to that then. Story for another time. I want to hear that. Okay.
So, but really following mom and dad on the savings route first, and then for myself, when I got my first job, was me opening up that checking account.
Okay. Okay. Neat. Because I had an older brother, right? So I picked up on some things once he started working. I started working, getting our first jobs, and I just wonder about that for lots of reasons. One, because I wonder about you, right, and what was going through your head in your life. And I know that'll be helpful to other people, so that's another reason. But also, I'm a father now. So I'm terribly interested in how you heard Dad's message, or you and your brother, are picking at him, having fun, blah, 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 money. I'm curious from that aspect as well, being a dad now who is trying to plant seeds to our children, right? We got 2 boys and a little girl that I'm already aware that they're doing some of the things that you're describing. Like they could hear me editing a video like this, or they could hear me, talking to somebody, because I work from home a good bit when I'm not in office or studio, and they'll be finishing my sentences too, right? And I just want to be able to cultivate fertile soil where that relationship will be good enough over time that they'll have, a similar transition to you as well. So what I'm saying is, I'm further curious about, what metric could you put to how receptive you were of Dad's message? You're hearing it, you're absorbing some of it, maybe whether you want to or not, because you hear it. But you implement the concept now too, though. So I'm just curious about that trajectory of, okay, well, that makes sense. I'm going to do that. I don't know about that part. You kind of referenced the 5% earlier. I don't know. I'm trying to ask you a concise question, but what do you think about what I'm describing of the relationship aspect between you and your dad? Because I'm curious. I'm in those shoes.
Hey, okay, so actually 2 things come to my mind. One is that Dad did teach us at a young age to always pay ourselves first. And how we actually did this, he taught us to us in like the form of like cups. And I don't have them in here in my office. It's actually in my studio right now. But there's these 3-cup system, almost like how you're familiar with your 3-cup system. There's a 3-cup system that he was using for the kids, where we would have a save bucket, a spend bucket, and then a give bucket. And back then, when I wasn't working, even earlier than that, Zach and I, we would actually have chores, and doing those chores, we'd get paid weekly. I think we got paid like $6 or $7 a week. and and what we would do, and I gotta tell you this story because I remember every week we'd switch off. So one week Hannah would do laundry. That week Zach would do dishes. And then the following week we'd switch. I would do the dishes, Zach would do the laundry. And then it came to a point where I turned to Zach and I was like, Zach, I really hate doing dishes. And he turned to me and he says, Hannah, I really hate doing the laundry. And I said, okay, let's just keep it. I will always do the laundry. You always do the dishes. And then when we would get paid, mom would pay us and she would actually give us real money. But I know sometimes in some families, maybe they want to use like Monopoly money or something. That's a smart and great idea too. But when we would get paid, 50% would go into our savings bucket. 40% would go into the spending bucket, and then 10% would go into our give bucket. Because back then we would go to Sunday Mass every single week. And when the basket would come around at the church, I would take my 10% from my giving bucket, and then that's what I would put into the basket. So he taught us how to always pay ourselves first before we go and spend the money. We go to Price Chopper, buy like those little action figures, or back at that time, I like those J14 magazines. I don't even know if they're still around, right? But he taught us how to pay ourselves first. And then when we got a little bit older, he taught us how to go make our money work harder for us. So he says, hey, kids, instead of you just leaving this money inside of your savings account or your checking account at Commerce Bank, what you should do is give me your money. If you give me your money, I will pay you 10% interest, and I'll pay you that interest every single month. And that's what taught me, and why I love private lending just so much in the real estate space, and why I feel, not to toot my own horn, but why I'm good at it. And I've never lost money in a lending deal because I know how to collateralize my investments. But he taught me how to go put my little green men to work for me. And that's what we call them in the Kesler family. Actually, this is from Mama. Mom says that our little green men, the objective of them is to go and put it to work for you, to create an army of green men that are out there working. So then you no longer have to go out and work for it. You can take back your time freedom, your location freedom. And back then, I didn't know the full extent of it until I got older, right? But now that I am older, it makes so much sense of, I don't want to just trade my time for my money and have my pocketbook dictate where I spend my time or how I'm doing my things, my purchases in life. It truly is a options freedom that money has. I have the option to fly first class if I want, or buy coach tickets. I have the option to determine what I want to do because my pocketbook is not determining where I got to spend my time or how much I can spend the money on. So 3-cup system, and then also the dad teaching us that, hey, kids, give me your money and I'll pay you out monthly.
Okay, I want to touch on 3 or 4 of those things a bit more then. All right, so because this is so real life for me right now, and lots of other people, I know it. So I've had a bit of an evolution on this theme of, okay, what about allowance? What about chores? And I love what you and your brother figured out organically, and that's where I'm at now as an adult, is that when you just let people choose, it's going to go smoother. Hey, I like this. Well, perfect, because I like that, right? So in the beginning, my parent mind is saying, of course, well, oh, okay, that makes sense. They're alternating between the different tasks so they can become familiar with what all's required to be responsible and, take care of yourself and whatnot. So good. Yeah, you should know something about laundry or doing the dishes or whatever. But after a while, you gravitate towards something that you prefer. Beautiful. And then y'all set that up. All right. So I love that. I agree with that. I've seen that play out in my household as well. Then let's go to, so here's where I'm at currently. Here's the one more thing there. Because I said it's been an evolution. Our children have chores that are just part of, hey, we take care of these blueberry bushes on our property because you eat them. I don't eat them by myself. So let's work on these blueberry bushes together, or just whatever it happens to be, right? And the same thing for laundry. We all wear clothes, so okay, you're going to help out with laundry. But then there are some tasks where I don't want to take the time to do that thing, so I'm more than happy to pay our sons now are old enough to do these things. And they're actually getting pretty animated about earning and things that they want to buy. So I love hearing your story there, and I'm getting some confirmation on some things in my life as a parent now, right? So they can earn from us. And then just within the past year, probably, Hannah, no, it's been longer than that. Over the past 2 or 3 years, probably. There have been times where I've told my boys about something we're doing on our property, something we're doing in our business, and I'll say, hey, if you want to work with Dad, yeah, because you got the birthday money, you got the Christmas money, or you've been working, with your papa or whatever, and you got some money. If you want to cut a deal with me, let's do a handshake deal. We'll write something out. I'll give you 10% or whatever we agree on, right? So here's one thing that I'm saying. Yesterday and the day before, I worked with a buddy on a job site from my church because he called me up and he asked me, right? So it's not necessarily something that I wake up saying, oh, hey, I want to go out and do this, right? But I know that the world's beautiful because there are people that do all these different jobs, right? With their hands, with their time. I'm going back to what you were saying about time and then money, because those are the two ways for us to earn, right? Our time and our hands going to some task, or putting the little green men to work, putting the money to work. So we need things built. These walls behind me, somebody's got to build the walls. And I think that everybody should pick what it is that they want to do, just like maybe you prefer laundry over dishes or whatever, right? But I love what you were taught earlier, and this is a big message I would love to deliver to our children and to anybody else that's listening, which is there are plenty of great people out there doing great work with their hands and time. And let's just give them the benefit of the doubt, Hannah, and say that they are savers also, which is not typically the case, right? Like that ratio that you gave us of 50% savings, 40% for spending, and then 10% for giving. Normally, it's the other way around. Normally, the bulk is spent and maybe, and it's a strong maybe something is saved or given away. You know what I'm saying? So I love that it was the exact opposite, which I feel is kind of a clue to anybody. Like if you see what most people's results are and you want something different, if you just do the opposite, you're probably in the general direction of doing yourself a favor.
Yes, Jesse, because I gotta tell you that is something else that Dad has taught us too. He says, don't be a lemric. I don't even know if I'm pronouncing it correctly, but lemricks are those little monkeys, right? If the monkey is going off the cliff, all those other monkeys will follow it. So he says, Hannah, don't be a lemric. When everybody's going in this direction, you run in the total opposite direction. And he really ingrained it in us because when we would go to middle school, he would drive us. I did have that luxury of mom and dad taking us to school every day. Sometimes if they couldn't do it, they had to go to the office. We just walked to school. It was a far walk, but we'd go and walk to school. But I remember sitting there in the car. I was in the front seat. Zach was in the back seat. And there was 2 entrances to get into the school. You could take the front way, or you could spend 1 extra minute, go up to the light, make a left, and then turn in and go around the back way. And Dad would always go the back way because everybody was up in the front of the line. And so every morning when we were driving in, he would look at that big long line and he'd point at every single car and he'd say, Limerick, 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 Limerick. And then he'd go all the way to the back and he would get us there faster just because he took that extra step just to go around, go in the direction that not everybody else was going in.
I love it. I mean, this whole image of, animals to slaughter or just, hamster on a wheel or being plugged into the matrix and doing what everybody does. I'm repulsed by that altogether now. It's not always been the case. I've been plugged into the matrix, right? Like I look back on, what maybe I'd call my corporate upbringing, which it was very blue collar. So I don't mean it in a white collar way, but I mean, just conforming to what everybody typically does because everybody typically does it. So I love that. Okay, good. All right, so I wanted to tackle some of that stuff because that's so real life. Chores, all right, some things just got to be done, but okay, paying for things to be done and other people to do things that they would rather do so that you can do other things. That's a cool topic. And then, that ratio of how much to... So I would say this. If somebody has no structure, some kind of structure is better. Like, I don't have to love your numbers. You don't have to love my numbers. Maybe if I do, private lending, my number is this, and that's my standard in the family. Now, or maybe when it comes to that filter of how much to savings, how much to spending, well, maybe I got a fourth cup, But some kind of structure definitely seems better than no money structure, because the no money structure then leads to that whole, oh, well, everybody's going through the front door, so we should go through the front door.
Yes,
Right.
that's right. That's right. I just we got done reading this book. I'm a part of a ladies book club with all of my girlfriends. We call it the Boss Babes Book Club. And so this past Saturday, we get together once a quarter. We have monthly meetings, but then we get together in person once a quarter. And it was at my house this past weekend. And one of the comments, we read the book, The Psychology of Money by the author Morgan Housel. And in that book, he talks about how maybe my strategy doesn't work for you. Jesse, your strategy may not work for your neighbor, but figure out what does work for you and works for your family so that you have that autonomy over your finances. Because most of the time, and I get it, because me just graduating high school not that long ago, we're not taught about money. We're not taught about financial literacy. And so people just don't know. We don't know what questions to ask. And when you start to then think about it, have the control over it, then you start to see the needle move in the direction that you do want it to move. I always think about the quote that sometimes people think if there's checks still left on the counter that they still have money in the bank. And it's like, no, guys, you guys really got to get a hold of this stuff. And I know people hate the term budgeting. And I'm trying to figure out another word for budgeting because I don't know why, but it's just not my favorite word either. I want to figure out a new little terminology for it. But it's essentially just looking over your cash flow that's coming in, because as Nelson Nash says, if you know what's going on, you'll know what to do. And that's why I'm a huge proponent of this app that I use on my personal site. It's called Rocket Money. I pay Rocket Money $5 a month. They have all my credit cards, my bank accounts hooked up to it. And I can see and track exactly where my income is going, my expenses, how much I'm spending out the door. When I'm like, oh goodness, I just spent $600 at Publix last month because I got too many pub subs. No, we can't be doing this. We got to reel it back in. But why I love that app so much too, it's kind of what Dad was teaching us with the 3-cup system is that it doesn't matter how much you make, it only matters how much you keep. And on that app every month, it tells me in dollar amounts and in percentages how much I'm keeping for myself after the expenses have gotten paid out.
Yeah. Okay. I don't know. The word structure comes to mind. If you don't like the restrictive, feeling of the word budget, maybe structure, just having the mindset of I'm building out how I want money to flow. That's what occurs to me. So I'll just underscore it. Some kind of structure has to be better than no kind of structure. I love that your dad planted the seed early, and that's what I'm doing about more business, more money moves together as a family. And I've tried to take an initiative because it's busy life, Hannah. It's busy, right? And then being a parent on top of that, sometimes I'm doing things with my sons. They're hearing me say things, or we're having conversations, and I'm not documenting it. And I've definitely tried to make more of a concerted effort here recently to, okay, If I'm sitting on the picnic table getting ready to make a deal with my sons, I'll tell Lauren, all right, take the camera, take the phone and record this, because I'm going to do it anyway, but let's record it. Let's put that out there for people to be able to see. And they change what they want, right? Like they don't have to like 3 cups, 4 cups, this percentage, that percentage, whatever, but do something, right? So I'm just trying to document along the way too. And I've got this long range view of how cool will it be to have great grandkids of mine look back and see me talking to their great grandpa about some deal that we're doing together. I think it's neat. So
it's going to be so far in the future that's going to be what do they call it, holographics, and it's just going to be standing up. It's no longer going to be on a screen. It's going to be like in 3D.
Crazy. That'd be so neat. So neat. So I'm trying to capture and document along the way, obviously for clients as well, but first and foremost for my own family. You made me think of another question. Let's see if I can recall it. You're inspiring me to ask so many things. I don't know if it'll. Well, I guess I wanted to underscore one more time. And here's what it was. So my dad, blue collar background. Your dad, white collar. I would call it a white collar background. Okay. So for everybody out there who's good at what they do, what I hope for sure is that they latch onto this idea that do what you're passionate about. Recognize too, like you said, that you only have so many hours in the day. You only have so many things that you can do with your 2 hands, so you are limited. But if you're loving what you're doing and you're helping lots of people, once you have some kind of structure for saving, and then you consider what those little green men, again, could be doing for you as well, it's still going to help you be in such a stronger position in whatever your day-to-day occupation is, because you've got your money to work. Again, people at work or money at work. Those are the 2 ways. So I just wanted to underscore that, because there are great people out there doing great work. And if they do actually address the human behavior of saving, and then if they put that money to work, I would suggest infinite banking. Hannah's going to suggest infinite banking first and foremost, right? But let me not speak for you. All right. So where are you at? Where are you at in, let's say, how have you used infinite banking in your personal life? Tell us just anything that you would want to tell us there.
Yeah. Because, and I'll even add on to what you just said too, because the policy is not just the stopping point, right? A lot of people like to think that the whole life policy is the investment. It's where I just put the money and then I stop there. And you could, I guess, in my opinion, I don't think there's any other better vehicle on this planet that provides the protection, the tax-free growth, having the government out of our hair, the liquidity, the control over our money. But it's what I do with the cash values through my banking system and through the policy, right? So my first ever purchase was that MacBook computer that I bought back in the day. Ever since then, actually, I'm talking to you on my new one now. I got the old one sitting back over there. I need to do something with it. I'm like, hey, I gotta sell it, do something. But I bought my MacBook computer with it. Another purchase that I made was actually my first ever house. When I moved down here to Florida in 2018, and this was actually dad who bought the house through his policies. He paid cash for it. I want to say the purchase price was like 150. It was a duplex. It was a 2-bed, 2-bath, about 1,100 square foot. It was like perfect for just me and my first house here. So I could have my office in one room, then my bedroom in the other. And he bought it for like 150. I want to say we put like 30 into it just for updates and renovation. So total price was about 180. And he was my mortgage holder, and I still own the house. My name was on the deed. But every month I would then take from my policy and pay dad my monthly mortgage payments. Because back then I was doing a little bit of lending, but it was just mostly directly with Pops. It wasn't outside of Pops. And so I said, hey, this policy is just like my glorified savings account. I'm going to start pulling until I really get on my feet. I just had a whole bunch of expenses moving from Kansas City down to Florida that I need to start pulling from my policy to help me with this new mortgage payment. So that was another big purchase that I did. And actually just sold that house. I was there for about 5 years until I bought this condo that I'm talking to you from over here on Beachside back in November of 2023. And that was another thing that I used my policies for. This is now my second house. And we did the same thing. I had enough in my policies to pay for the down payment, put money into escrow, go through all of those steps, but I didn't have enough for the full purchase price. And so we did the same thing. Dad came in here, he was my lender. He lent me the money to go purchase this house. Now he owns the mortgage. And I'm telling you, he doesn't just do this as willy-nilly, right? He actually files the paperwork with the county. There's a note on this property, and he holds that first position of the note. Because I'll even say this, we are big Judge Marilyn fans over here, the People's Court. If y'all ever heard of the People's Court, she doesn't have it anymore. I think she's under a new show now. But Judge Marilyn would always say, when you get in trouble and why people show up as litigants, it's because you didn't pull out a toilet paper and the nearest crayon to write down that receipt, right? People always think it's just word of mouth and, oh, it's my friend, it's my father, it's my daughter. We trust them. They're not going to screw us over. No, that's when you want the proper documentation. So we go through everything to really file it. And I'm now still paying Dad my monthly mortgage payments. And I will say too, and we can go down this rabbit hole if you want, but Dad charges me 13% interest to borrow from the family bank. And a lot of people could probably be thinking, oh my gosh, why would he ever do that? That's just so mean. Why would he charge you that much interest? Well, if you understand EVA, economic value added, that's the whole reason of why we charge us so much interest. And then we get into like death benefit talk and different things of what's going to happen after mom and dad passes. But bought 2 houses. I bought a van, a conversion van. As I like to travel around the country and I like to go to music festivals and I go and speak on stages. So I thought it'd just be fun to travel around, just me and my kitty cat. And long story short, but actually that van got flooded in the recent hurricane that hit Florida. I want to say it was Hurricane Milton in October of 2024. So I just put a down payment on another van build that should be done in June. And when that comes due, I'm going to have to take money from the policies to then go and pay off the rest of the van if that's what I choose to do. So just a few things up to that point. Oh, last thing I'll say too, taxes. I use my policies to pay my taxes. When I bought this house, I wasn't thinking through what the property tax bill was going to be for here. And oh my goodness, I got hit with that large bill that I was like, did not think this one through. Good thing that I have my policies though. And I can take the money from the policies, go pay Volusia County. And then now I'm just saving back up inside of my policies, now prepping for when October comes due that I got to go pay the property tax bill again.
Yep. Lots of good examples. So I love, and I don't mind talking a bit about it. I love the idea, and you see this described in Nelson's Becoming Your Own Banker book, that what one generation starts can really create this self-sufficient system. So I don't know that there's anybody that wouldn't aspire to the ability to be able to facilitate a home purchase with a child, right? Or a grandchild. That's beautiful. That's awesome. I mean, the whole idea that you don't have to go and do that with a bank and then just have a plan for the next 30 years of bleeding out those typical interest dollars to the banks. It's incredible. It's incredible, the amount of money. Which then leads me, and I mention that because that then leads me to talk about that 13% that you're talking about, because depending on top of the EVA, on top of the cost of capital, let's just have a big picture frame of reference to where we say, well, okay, let's say this is a good thing. If you agree that this is a good thing, that one generation can help the next generation get their home. Well, what if we just extrapolate that out one more generation? Won't we want to be able to facilitate that later on down? Probably so. Okay, so if that's a good thing, might it cost more in the future? Yes. So shouldn't you have a robust amount of interest that stays in the family to be able to facilitate that next purchase? So we just need to think bigger is one thing that occurs to me. And when we do think in this intergenerational fashion, cool things are happening, such as you described. You look like you had something you wanted to say there. Anything else stick out to you?
I'm so agreeing with you because, okay. Oh, and let me do this big PSA as well. Have your annual family banking meetings. If you are truly practicing this concept, you need to be on the same page with your immediate family. I would love for it to expand out into the other family members, the aunts and uncles, the grandparents and cousins and different people too. But specifically, you should be on the same page with your immediate family. And I'll tell you this, we just learned this at the last meeting in February when we were up in Idaho having like a little family vacation. And why we're tracking the interest that we pay is because at the end of it, how dad likes to say is that, hey, if you help me better my life while I'm here and I'm living, I'm going to make sure that your life is better off when I'm no longer here. And so what we do is we actually track the interest payments that we are paying to dad for these purchases. So for just a quick example, I have an older brother, Sean, and I have a younger brother, Zach. Well, Sean, let's say, because he's bought in a few things, he's bought in some houses, he has his own business, he had to buy 2 cargo boats for it, a few golf carts for the island, different things. And so he's borrowed from the family bank. And so Sean, let's just say that he has paid dad up to this point $200,000 just in interest payments. And let's say Hannah, I've paid him $100,000 in interest payments. And my younger brother, Zach, let's say that he's paid $50,000 in interest payments, just making up numbers. So when the time comes, because it's not an if it happens, it's a when it happens. And that's why I'm a huge proponent on death benefit and life insurance, because I mean, it's the only insurance, in my humble opinion, that's actually guaranteed to happen. But that's a whole other topic for another time too. But when that time comes, let's just make believe that there's a death benefit bucket of $30 million, making up numbers. There's $30 million of death benefit between mom and dad. So what will happen first is Sean will get paid $200,000 from the death benefit. Hannah will get paid 100, Zach then will get paid 50, and then the remaining cash bucket that will get divvied up 3 ways between each of the children. So we are going to receive all of those interest payments back to us just in the future, and we truly are keeping the money in the family, because if we were to go down to the commercial bank, ask to borrow money from them, all of those interest payments would have gone to them directly.
I love it. I want to have more. So me in my household, I want to have more of those conversations. And we've had family meetings, let's see, since 2019. So we're going on 6 years of we've had family meetings. And they're typically 4 times a year, 2 times a year. So I would also say, yeah, at least. And we're to the point now, Hannah, to where we record those. Because again, I'm trying to document this stuff, again, for my own family, but also I feel like that gives us a lot of experience to have these discussions, to inspire people to implement how they want, right? Like put their take on it. But yes, build some kind of structure for your cash flow. Yes, pay family members to do things that they want to do. And yes, keep more money in the family. And yes, let's go back to our whole, do the opposite of what most people do, and maybe you'll have a better chance at success. Are most families, settling mortgage agreements in the family? No. And they're losing that money. Are most families regularly having family meetings where they're talking about deals or opportunities? No, they're not. So just consider it. That's what I'm saying. I love that. I love that stuff. Tell me, let me go to a fresh question. There's so much we could visit and dig deeper on, but let me go to a fresh question. What's anything along your infinite banking journey that you wished you would have grasped or worked through sooner? Or what clicked for you at some point? Because what I'm saying is I can remember having bought 2 policies probably. And I'd been paying off debt and I'd been financing some things in the family. But like within 2 or 3 years, I was still having follow-up epiphanies where something clicked with me, right? So I'd love to hear anything that sticks out to you in that realm.
Yes. So actually the first thing that comes to my mind is when we went in and designed my first policy. Dad actually designed that policy 60 base, 40 paid up editions.
Okay.
And at first, I was irritated. I was like, Dad, why would you do that? Dad, I need the money. Why would you do this 40 base 60 PU way? Why'd you do it the opposite way? And he's like, Hannah, just trust me. He wouldn't even entertain me. He's like, just trust me, just trust me. Just sign your policy, pay your premium. And at first I didn't understand why he designed it that way. I was a little peeved at it. But now that I'm older, I am so grateful that he designed those early onset policies with more base, because in the long run, it's just going to be better. It's going to be better as a cash machine. It's going to be more growth in the compounding in those later years because I have such a strong base foundation that's in there. And then because I have such a strong base premium, I have found out that between these policies versus the ones that I've gotten later on where they are more 40 base 60 PUA, that I can actually put more paid up edition premiums into those policies because that base is so strong and I'm not so snuggled up to that MEC limit any longer. So that was a big epiphany that I had, is just the strong base foundation. Now I get it. Most of the people who this is like their first policy, they're just getting into this. They are in that financial hamster wheel of living paycheck to paycheck, that they may need more of a policy with a minimal base and larger paid up edition just to solve that money problem. But don't close out the idea to really having those strong base premiums in your policy, because in the long haul, you're going to be so much farther ahead and better within your money game. So that was one of them. And then also I would say the other one is that when I look at my financials every month and I have extra monies that are left over, because this is what I do personally. I keep 6 months of my overhead expenses, and that's monies that I do not touch. Those are my emergency funds, because God forbid if something were to happen, I got 6 months of overhead expenses covered. And what I do is I actually split it up. Half of it, 3 months, are kept in my checking account at the bank, and half of it, the other 3 months, is saved with inside of my policies. And that's money I do not touch. And I'm very disciplined with that. So every month when I'm looking over my financials and I see that there's more than 3 months of expenses sitting inside of my checking account, I will take that money and I will see if there's more paid up edition premium that I can fit inside of these existing policies that I have. If there's not more wiggle room, then I look at, hey, did I pay up my policies all the way to the year? Maybe I'm doing something on monthly or quarterly, but then now I'll just pay it up, pay it fully to the annual premium. And then if I totally max out all of them, I'm paid up all the way to my annual premiums, and I still have money that's left over, then I start having those honest conversations with myself saying, hey, are you ready to commit to more premium? Can you add on another policy, opening up that branch office of your bank? If the answer is yes, I'm starting another policy. If the answer is no, then I take that money and I go pay back my policy loans. So it's all cycling back through to the policies. I don't like to keep money that's inside of the banks. And that's been a big epiphany, I would say, as I've been getting older with this, because I know some people, they can kind of feel comfortable when they see that number that's sitting down at their Wells Fargo bank account. And I'll even tell you, I just had my Tampa mastermind earlier last month, in the month of March, and somebody was sitting there on our mastermind VIP day when we were just talking around the table. And she says, yeah, I feel comfortable when I see this number inside of my checking account. And I said, you know what? I want to change that mentality. I want you to be comfortable with that number sitting inside of your cash value life insurance policies. Because what are the differences? Banks and mutually owned insurance companies, they're literally the same thing. It's the only thing that's different is the name on the front door. They're both places of where we can store and keep our money at. So, some of my ideas.
I love it. I love it. And the passion that you say it all with. You've said two things that I'd love to just have a standalone conversation about, which is, the policy structure. And then, of course, your layers of systematic evaluation where you're considering, okay, am I maximizing the policies that I currently have? Do I need to, loan out more money with a private deal? Do I need to pay back a policy loan? What's it time for? So both those are great. And then the one you just said about banks and the mutual life insurance companies themselves, I would even give a little pushback right there, but I get where you're coming from. It'd just be an interesting conversation. That's what I'm saying is, I appreciate everything you're bringing up, and I see the potential for more conversation on those things, but I definitely want to capture as much of your story as I can. So I'm mentioning those, so maybe I'll remember them and we can revisit those. People can let us know in the comments if they'd like us to walk through any of these things. Right.
Love to.
So, right. I love it. Appreciate you. So then just describe then, and you already mentioned it, what about that transition from your practicing infinite banking to you're a pro with infinite banking? There was that instance that you said where, Brent couldn't make the one, so he just said, well, you're going. I got the which, let me say something right there. Like you've said 3 or 4 times now, something in life from your childhood till going pro, where I feel a mixture of, okay, you're getting good messaging from dad. Dad's being a good influence, planting seeds about concepts. And I think that's a balance for parents anyway, is where is it right for me to say, trust me, Hannah, we're doing a 60-40 build, like you mentioned earlier, right? Trust me. But also letting people figure out things enough for themselves as well. You know what I'm saying? Like that's a balance with, and I say it as a parent, it's a balance with clients, right? Because we can answer people's questions all the day long. But at the end of the day, Nelson said it best, I think, when he said that when you know what's going on, you'll know what to do. So we're just trying to point things out to people and answer questions and share best practices and give our stories to inspire people. But really, at the end of the day, they got to decide upon these things and adopt these things or whatever themselves. So maybe I threw 2 things at you at once. Sorry. But I think it's an interesting balance. When do you say, trust me, versus when do you give somebody an opportunity to learn something for themselves? And both those things can be good and beneficial. But tell me about the transition from practicing infinite banking to being a pro with infinite banking. What sticks out to you there? What went through your head? What was that like? Tell me about it.
I would say really, when I started to find my confidence and get into my own person, because there was some time, even when I was speaking on stage or doing webinars, where I've been on a very big self-discovery journey. And no matter how old you are, I think you always have to go on those self-discovery journeys because you change as a person, right? I mean, you're not going to be the same person with the same mindset, the same beliefs, same habits that you do today than what you will in 5 years from now. So I think it was really going on those journeys and finding my confidence that's led me to speaking more confidently, for lack of better words, on this, to really telling people, hey, this is what I would do if I was in your shoes. You can take my offer, my opinion, or you don't have to. I don't care. I'm not going to care more about your financial life than what you do. It's your financial life. So I always think about too, see who that person is that you're taking the advice from. Sometimes people will still keep taking advice from their, pardon my French, their broke ass brother-in-law, but they won't listen to their mentor or their business coach who brings in 5 million in revenue every single year. So when people are giving me advice, and actually at like a lot of live conferences, I sometimes will ask them this abrupt question. I'll say, hey, what is your net worth at? And if they tell me, and if it's over 1 million, then I'll maybe listen to them. But if their net worth is not over $1 million, thank you for the information. I know this is advice that I should not be taking. Okay, that might be a little too abrupt, but you get what I'm saying? You got to understand what advice that you're taking from which people, because I take my advice and follow the people in my life that I see their lifestyle, I see what they're doing, and I want to live that same lifestyle that they are living. So I just mimic and imitate those same exact steps of what they're doing. I don't need to reinvent the wheel. Yeah, I want to create, I want to be better, but I don't need to reinvent everything that's out there. Just copy and mimic what these elite and wealthy people are doing. And that's just what I've been taking into my own life. So I kind of forgot the question, but
Well, let me tell you what you made me think of, which is in the book How to Win Friends and Influence People. I remember it from the first time that I read it. Dale Carnegie is quoting a guy that said, "Everybody is my superior in something, and in that I learn of him." So I think it's also valuable to evaluate what is somebody's position and what does their trajectory look like if they have an opinion about something, right? And then maybe I keep it, maybe I don't, maybe I keep part of it and change what I want, right? But also at the same time, everybody's my superior in some way, and I can learn from that and that thing, right? But maybe it's not about net worth and money and what makes sense and things of that nature. So that was one thing you made me think of. And then I'll let you go back to where you were. We were talking about that transition from practicing IBC to being a pro in it, and evaluating people's opinions matters. I agree.
yeah. I think I don't know if there was one true pivotal moment there. I think it was when I started to use my policies deeper and deeper than outside of the family. It got to a point where I was like, Dad, this has been fun, but I'm kind of getting to that age where, pardon my French again, but I need to get off the nipple. So I'm going to take my monies that are invested with you and I'm going to go out here and I'm going to go and do some of my own things now. Thanks for bringing me on this journey. You've taught me a lot. And it actually, you know what it was? It was the pivotal moment is when I learned that I kind of outgrew my dad as my first, I'll even say my favorite mentor. You get to that point where you outgrow your mentor and you got to go and find somebody else. And so I think it was really that point where I was like, Dad, thank you. You've taught me everything that I know. And I still go to him for advice today, but I just knew that I was at that point where I'm like, hey, I need to pivot. I need to shift. I need to kind of find my own. And I think that's where a lot of the confidence has come from, is doing the work myself instead of just leaning on that barrier of my father. And I know I'm sitting over here talking about my pops a lot, but let me tell you, my mama is really the glue that keeps the family together, in my opinion. She's the heart of the family. But especially when it comes to just money knowledge, dad really leads that train in that direction. But she is really the one that will go through the policies on a quarterly basis. And she's like, Brent, there's X amount of money that's sitting over here. We need to go find a place to go put these little green men to work, right? So she's always staying on top of it with him.
Terry's always tracking the little green men. I love it. Well, what I would say is, again, as a parent, just because that's a filter that I have on life right now, of course, I always want a table or a spot at the table with our children. But also, I recognize enough as a father that I want other great people in our children's lives to be another voice. And I actually need to facilitate that so that they will hear something that might be the same message even that I have, but other messages will be different because everybody has their gifts. I want them to have other influences, So I understand that. So let me ask this, Hannah. I want to be cognizant of your time. We've got a hard stop. I want to ask you rapid fire questions. Let me maybe just have my last question about your IBC journey be about, is there anything that you wished I had have asked or that you would leave people with?
The first thing I always think about, the first thing that comes to my mind, there's probably other things I'm going to think about once we get off this call. I'm like, ooh, I should have told Jesse that. But you know what it is? It's two things. Number one, pay yourself first, y'all. I know you've heard it before, but do you really do it? Probably not. Pay yourself first. Take a sliver of what you're making and have that separate segregated checking account. Just take a sliver. I say at least 10%. Move it to the side, pay yourself first, and then go pay everybody else next. And if you really need it, the money's sitting there inside of that segregated checking account. Just start to create those good disciplines and habits with yourself. So that's one thing on the practical side. One thing on the personal side, what I've seen my business really do is excel when I am in my true authentic form. Sometimes you want to almost put up this barrier or this mask because you get you don't want to let people in, you get embarrassed. I mean, long story short, when I was younger, and one of the reasons why I got fired from the chiropractic office is because I was struggling with addiction. I had drug habits that was not good, and I never wanted to share that story. I would like dig it deep in the back of my mind. And that's where my mentor now and my business and media coach, he was prepping me because I was about to go speak on the NASDAQ stage, have a Jumbotron in New York City, meeting with Rudy Giuliani, doing this really cool crap. And he goes, Hannah, what is the story that you don't want to tell? And it was that story. And he says, great, that's the story you're going to be sharing on the NASDAQ stage. And I'll tell you, ever since I've done that, I just found a new realm of confidence, a new realm of just myself, my authenticity. And I think people really resonate with that. So another thing I would say is just be you at your core. No, I'm telling you, everybody's so sucked into their own daily living of life that they're not paying much attention to you anyway. So just be you.
I love it. I love it. So I see so many avenues where we could revisit things or go deeper on things. Go ahead and tell everybody where they could see and hear more from you, please.
Absolutely. Yeah. So you can go find me on my podcast show, the Money Multiplier podcast. Every week I got new episodes. Also, if you want to go just to my direct website, it's hannahkesler.com. Hannah spelled the same ways, forwards and backwards, Kesler with one S. And then my business page, themoneymultiplier.com.
Yep, and I'll definitely put all that contact information in the show notes below. Anyway, let's transition. Let's wrap up. This has been a lot of fun for me. I've told you I could do some more of it and would like to. Let's do some rapid fire questions. I think this will be fun for you. All right, so let me throw them at you. What's a recent favorite book or podcast of yours?
Oh, all right. Podcast Two Hot Takes. If y'all know Two Hot Takes, it's a great one. They read Reddit stories. A book, though, you know what I've been reading is, at the same time I read a nonfiction book and a fiction one. My fiction book that I've been really into right now, it's called A Court of Thorns and Roses.
I feel like I've heard that, but I've not read it. Okay, so I like that because I do the same thing. I'm typically reading 4 or 5 books at the same time, but mentally for me, they have to be in different categories. So I'm like you, like, okay, I got a fiction thing. It's not going to bleed over or mix me up or whatever.
Hey, Jesse, my nonfiction that I'm reading right now is Start With Why and Get Done. I'm reading those 2 right now.
Okay, love Simon Sinek stuff for sure. Do you have a hidden talent people may or may not know about?
I actually do. I spin hula hoops.
See there, I recently added that to the rapid fire question because I was like, what if I'm talking with my friends and they know or do something that's cool that I don't even know about? See there?
And I can do it on fire too.
Well, why wouldn't you? If you could do it on fire, why would you ever not light it?
Of course.
Of course.
All right.
How about what's the most impactful thing someone ever told you?
Oh, man, that's a tough one right now on the spot. What is the most impactful thing someone has ever told me? Shoot, man. My mind's going blank right now. You know what it is? It's there's probably a lot more that's just going blank in my head, just being on the spot. But I was thinking about the other day because I have people who want me in 2 different locations on the same day. And I had to pick the one that was going to benefit the business the most. And so I had to reply back to him in quotes and say, get the money. So I've been thinking about get the money a lot.
Okay, I got you. What's one of your go-to healthy habits?
The gym. I know people say it all the time, but like seriously, when you start your day go into the gym, it feels so much better. Get that good pump in, then you're done, you're in a great mood, you're glowing, you take a nice shower, and then you get into your day.
I love it. I love it. All right, some super rapid fire. Sunrise or sunset?
Sunrise.
Beach or mountains?
Beach.
Picnic or restaurant?
Restaurant.
Flowers or plants?
Ooh, it depends on the week, but plants.
Okay, cool. What's one of the most interesting places you've ever visited?
I just got back from Thailand, and I'll say that was the best vacation and backpacking trip I've ever done. You guys got to go and make it over to Asia.
And I knew that you just gotten back for that trip. Asia is one of the continents I've not been to. I've been to 4 so far. So Asia is completely undiscovered for me. I was glad to see that you had an amazing time. All right, last question. I got this one from my boys one time at supper. Hannah, we were just sitting around talking. Would you rather be able to breathe underwater or fly?
Ooh, I think fly. Just with my lifestyle right now, fly. But probably in the future, I would say breathe underwater.
I've never had anybody give that okay, interesting. All right, very cool. All right, well, this has been a lot of fun. I knew it would be. I do see a lot more opportunity in the future for us to have conversations about any of these things if you would like to, if the people would like to. In fact, again, remember, Hannah's contact information is going to be below in the show notes. If you'd like to speak with me, you can find me at durhamtalents.com. Our hope is that you consider this idea of paying yourself first, and then perhaps consider doing that for the purpose of infinite banking. I hope that you live and leave a lasting legacy. Have a great day. Take care.
But the family's doing good. Kids are great.
Yep.
Good.
Yep. Everybody's healthy. Everybody's happy. Everybody's wide open.
Good. Hey, and I can see too, actually, you've really evolved as well. A lot of people tell me that, and I'm like, I get that feedback too, but like I also want to tell you as well is that you have evolved just like in the podcast and just your tone of your voice, how you come across, and almost like just the confidence I see. And so I just want to applaud you on that.
Well, I appreciate that. Anything else? Maybe something specific or nuanced. You know what I mean? You need anything from me? Oh, Will's.
I was going to say hi.
Dude,
What's
what's
up? I can't hear you.
Yeah, I know. She said, hey. She said, what's up?
If you learned more about how to live and leave a lasting legacy, check out this next recommended video to continue the journey.